Would you prefer to lend money to a friend who has borrowed from everyone they know, or a friend who has always promptly paid you back in the past? Credit companies usually don't know us personally, so they use our credit scores to determine our reputation and creditworthiness. In other words, they look at your credit history and habits to determine how likely it is that you will pay them back as promised, and if they trust you for a loan, your score will determine the terms. Credit risk. Look at 5 main areas when judging your creditworthiness. Do you pay on time? How much of your available credit do you use? How long have you had these credits? Have you recently opened a new credit? Can you handle different types of credits? Or in other words, do you have a good credit mix? The most significant factor in your creditworthiness score is how you've managed your finances in the past. If you've never been late or missed a payment, your score will be significantly higher than those who haven't kept up. Filing for bankruptcy, having a debt go to collections, or being evicted can destroy your credit score for years. Another critical factor in your credit score depends on how much of the credit you use, even if you pay the balance in full each month. Take Parker and Bertha, for example. Both people have the same credit card with a limit of $2,000. And both always paid off on time before the due date. Parker only uses $500 of his credit, while Bertha uses $1,900. Since Parker uses less of this available credit, he gets a higher credit score. Maxing out a credit card can lower your score enough to move you down from good to fair, or from fair to bad. Another element that factors into your credit score is the length or age of your credit history. The longer you spend in good faith with your credit, the higher this bar. Score. Just be warned that opening too many new loans or credit cards will give lenders the impression that you are under financial distress. Your credit mix also plays a small role in your score. Credit companies look to see if you have a history with both installment and revolving type debts. What can you do to improve your credit score?